Okay. All right, so day 4 of the boot camp, right? Day 4 of the boot camp, we are going to be speaking about day 4 of the boot camp. We are going to be speaking about price ranges. Okay, price ranges and high probability order block scenarios. Okay, high probability order block scenarios or any PD array for that matter. All right, order block scenario. Since order blocks, or since the PD arrays are basically based on order blocks, I elected to use that. Okay, so now the first part that we're going to be speaking about is price ranges. Okay, so now we understand that price ranges, okay, is also known as what? Dealing ranges, right? And can someone tell me dealing ranges are also known as what? Question mark. What are dealing ranges also known as? Starts with I. Okay, very good. Okay, we have the interbank dealing ranges. Now, what we have to understand is that we can, there's essentially going to be a ton of interbank dealing range that we're going to see within a day. Now, while I agree that having a lot of IBDRs or having a lot of dealing ranges makes your perception, okay, makes your perception of price subjective, right? The only way that you can make it objective, okay, is by first defining your what? Defining your higher time frame dealing range. Okay, by defining your high time frame dealing range. So by after you have defined your high time frame dealing range, okay, it's essentially going to be looking like this, right? So easiest example would be 1, 2, 3, and price goes down, right? This is your what? Dealing range high, dealing range high, and this is your dealing range low. Okay, this is your dealing range low. So given that we have a dealing range high and that we have a dealing range low, we can then split them into two types, right? The one that has a buy side rate first. So we have a buy side rate first, right? That's number one. And number two, we have a sell side rate, right? So we have a sell side rate. So the dealing range that has a buy side rate first leading to a sell side rate is what? What's its nature? Someone? Its nature is bearish, right? The nature is bearish. Now, here is the context, okay? You see now when you're looking at this dealing range, okay, you are over here, right? So here, you are here. So you are here. Now, when you are over here, are you going to be buying or are you going to be selling? Let's go. Are you going to be buying or are you going to be selling? You're going to be buying, right? Okay, someone tell me why will you be buying if the nature of this range is bearish? And let's say that this is like the 4-hour, so H4. Why will you be buying if the nature of this range is bearish? Because we are in discount, right? Correct. Because we are in discount. So now you understand that when we are in a bearish dealing range, selling inside of discount is a no-no. No selling inside discount. You want to be buying inside discount. Selling your larger trade that's going to take out this low is going to be up there, up inside of premium, following the PD array matrix, right? Following the PD array matrix. Okay, you get me, everyone? Yeah, feels good, good. Okay, then let's look at the next one. Now, okay, bullish scenario. Okay, so how can I draw? Okay, here you go. Bullish scenario, we have down, this one, up we go, right? So then we have the dealing range low, Okay, and then we have the dealing range high, right? So now we have the dealing range high, we have dealing range low. Okay, now obviously inside of this point, somewhere over here, that's going to be a lot of price action, right? So let's just say price action exists. Okay, so a lot of price action, right? So you know what I mean, right? So we have a lot of price action. We have the dealing range high, we have the dealing range low. Now let's assume, okay, let's assume that you are let's say over here. Okay, let's say this is the 4-hour time frame. Okay, 4-hour time frame. You are here on the 4-hour time frame. You are here. What are you going to do on the lower time frame? Are you going to be buying or selling? Okay, you say, or if you say buy, right? Okay, so we have discount, have premium. Okay, you want to be a bull, you want to be bullish down there. All right, good. Then what about over here? What are you going to do over here? You want to be preparing to sell, right? Obviously, you're not going to sell exactly that. You're going to be prepared to sell as you see the correct signatures in price. Okay. Then you got this one, you got this one, and whenever price comes back here, right? Whenever price comes back here, eventually, when price comes all the way back down over here, right? You have to ask yourself, what is the nature of this price swing? Someone tell me. Nature of this price swing is bullish. All right. Therefore, we can reasonably assume, not I wouldn't say assume, we can reasonably anticipate, given that we have certain signatures in price over here, right? We can reasonably anticipate that we are going to get a further expansion to take out this high. Okay, you're going to be getting a further expansion to take out this high over here, because this is a bullish range in nature, right? Yeah. That's like when you get deep into it. I'm just talking about the general logic, right? The premium discount. Okay, so when it comes back to discount, you want to be buying, and then boom, boom, bam, bitty, boom, we go and take out the high. Okay, so that's H4, right? So obviously, higher the time frame, larger this displacement is. All right, and then yeah, inducement, all that stuff you can infer and you can do it yourself. Okay, so that is the bullish and the bearish price range, right? And now again, like as I'm showing you, I'm choosing the H4. I'm choosing the H4, right? So now the most effective, right, when you're looking at day trading and when you want to be in the correct or when you want to have, how can I put this? Okay, when you want to participate inside of the correct order flow, right? Or if you want to get in really high probability trades, you have to look at where you are, okay, where you are in the current, okay, listen, current dealing range, okay, dealing range on the high time frame, HTF. Okay, now what do I mean by this? Now look at this. Okay, now let's assume that on okay, on the 1 hour chart, okay, on the 1 hour chart, you have something like this. So we have this. Okay, now look, now we can see that fine, we have a dealing range high over here. So let's use different colors. So we have dealing range high number 1. Okay, so you have dealing range high number 1. Then you have here, we have dealing range high number 2. All right, and then over here, this is just based on the example, this is just low resistance liquidity pool. Okay, just in this example. Okay, now you have dealing range high number 1, dealing range high number 2. So when you look at the higher time frame, now Obviously you're going to think to yourself, okay, am I going to be using this one or am I going to be using this one? No, when you have this confusion, you then switch to the higher one, H4. That's my pen. Okay, here, H4, and the H4 is going to show you that this bigger one is your, this one here, dealing range number 1 is your actual dealing range high. So if dealing range number 1, right, is your actual dealing range high, all right, now what does that say for dealing range number 2? Is it going to be a temporary reaction or a permanent reaction? I mean, nothing's ever permanent, but you get what I mean, right? Is it going to be a temporary displacement down, or is it going to be a prolonged displacement down? Okay, well, it's going to be temporary, right? So you get a temporary retracement. Okay, you get a temporary retracement back down. So you see price going up. Oh no, it came and did this and it came down, right? What it's doing is it's going for rebalancing, and after it goes for rebalancing, it goes back deeper into premium. All right, goes back deeper into premium. Now here's the catch. Here's the catch. Unless it goes back deeper into premium, right? Unless there is what? There is institutional queue of what? Institutional accumulation of shorts, right? Unless there is SMT over here. If there is SMT over here, then yes, you're going to go lower prolonged displacement. If there is no SMT on a higher time frame inside of this particular area, right, we're going to see we're going to see an expansion deeper into premium. All right, we're going to see an expansion deeper into premium. Now, while that is being said, this dealing range high number 2, or this dealing range in and of itself, all right, on a higher time frame, okay, on a higher time frame, what does it look like? Think carefully. It's there in the other bootcamp videos, the recent ones. What is this going to look like in terms of candles? Very good. Yes, going to be bearish order block over here, right? So bearish order block, boom, down, and then up it goes again. Okay, to get into this particular part of the dealing range inside of premium. Okay, so that's that. So now your job is to apply to the other side for the lows. All right, exactly, to create a small bullish dealing range, something like this. So we have low, 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 up, down, up, and then big displacement down. Okay, assuming that this is bearish. All right, so that's that about dealing ranges, interbank dealing range, price ranges, and whatnot. Are you okay with it? What about the others? Okay, all right. Then next up, let's talk about balanced price ranges. Okay, now here's the thing. Balanced price ranges, in the earlier videos that I've spoken about balanced price ranges, right? I said that it's going to look like this. Big displacement comes back to this portion and then goes up. Why? Because this portion is not offered anymore, right? Meaning that the order flow over here is matched up with order flow over here, therefore they are balanced. So essentially you would say opposing order flow nullified. Okay, opposing order flow, wrong spelling, opposing order flow has been nullified. All right, so that's what I said earlier, right? Now while that is true in terms of logic, okay, while that is true in terms of logic, there's another way that balanced price ranges can be understood by, or can be understood. Okay, here's the thing, this here is correct. Okay, you want to see a nice displacement over here, and obviously now by now you guys should know that this is what a perfect reaction from this region is a change in what? Yes, change in state delivery, and then obviously we want to see something happen with the lows as well. So likewise with the highs as well. Okay, making it the balanced price range. Now here's the thing. While this is true, okay, in terms of structure and logic, there's another way. Let me tell you. Now it's very hard to find examples, okay, because this other way I'm going to speak about happens very rarely. Okay, I mean I would say it happens on a daily basis on the very low stuff, the lowest time frames. But when it happens on a larger time frame, then it's visible. But you have to know what you're looking for. Okay, so here's how it is. Take a fair value gap. Okay, now again I would show you examples on the chart, but it's very hard to find, right? So whatever I'm showing you now, just be aware of it. Okay, don't actively look for it, just be aware of it, right? When you see it by mistake, or when you're looking at the charts and when you see it, then yes, that's it. All right, so let's say that you have this move up. Okay, now notice the gap. Okay, notice the gap. This here is the fair value gap from the fair value gap high and the fair value gap low. Right, fair value gap high and fair value gap low. That is met with, okay, another gap like that, exactly meeting up with this fair value gap high and fair value gap low. Essentially, the fair value gap high on the right side of the curve is matched up with the fair value gap high on the left side of the curve. Okay, then the fair value gap low, same thing, right? The fair value gap low on the right side is matched up with the fair value gap low on the left side. Yeah, so this entire portion here, over here, here, this is a balanced price range. Okay, balanced price range, meaning that there is nothing, okay, there is nothing offered up over here. Nothing offered. Okay, nothing offered here. Then nothing offered over here, price is gonna and drop. Okay, do you understand the concept at least? Meaning that they have to line up. Only if they line up, they are considered balanced. Okay, if they don't line up, then just forget about it. Then then price will go higher or lower. Okay, you guys get it, right? What about the rest? The others. Alrighty. So I mean, it's nothing much, right? It's nothing much. Only the boot camp. After the boot camp, I'm going off record. Does it have to be perfect alignment? In terms of the wick, no. In terms of the body, yes. In terms of the body, yes. That's why it's called balanced. Yeah. Okay. So you're just being few 1 or 2 pips, deviating the highs and lows is fine, but they should be visually aligning, and the price, when they actually balance, the price will also align with the visuals. Yeah, balance price, you look for imbalance. It can happen it can happen in the middle of a range as well. It can happen in the middle of a range as well. Okay, but just understand the concept. Just don't think about it too much, right? The one that you should be worried about in terms of price action, the one that you're going to see most often is going to be this one, this one. Okay, so balanced. Yeah, so this is the portion that's balanced. Price is not offered over here, therefore it displaces further. This is the portion that's balanced. Price is not offered over here, therefore it displaces lower, therefore it's balanced. Okay, this is an extreme scenario where price is continuously displacing, right? So it's like that. Right now when I'm showing you some examples, if I find it, I'll show it to you. Right? I remember seeing it on Euro USD. I think last month. I think last month. Okay, so this one, right? You guys get it, right? Then let's talk about high probability returns to order blocks and low probability returns to order blocks. Okay, High probability returns to order blocks and low probability returns to order blocks. So let's talk about high probability first. High probability returns all right. Okay, now when we talk about high probability returns to order blocks, right? It's not simply you having this up, down, up, right? And this is your bullish order block. No. Okay, now even by looking at it in terms of a line graph, it's wrong. Okay, it's wrong. Your high probability return to order blocks, right, need to have, right, your order block stop hunting price action to the left. Okay, stop hunting price action to the left. Here's how it's going to look like. You have this, you have a low. Okay, then you have this. Okay, now here's where I'm going to draw the candle. Okay, then you have the down close here, then you have the big up close. Right, so you have the down close, you have the big massive guy over here. All right, and then of course they're going to go up a bit and they're going to drop down into this. Okay, I'm going to drop back down into this. Here is your stop hunt here. So this is your stop hunt. Okay, stop hunt. This is the order block or the down close candle that moved into the stop hunt or that formed below the stop hunt. Okay, that is your bullish order block. All right, and then this is your institutional, or I wouldn't say institutional, I'd say fractal institutional sponsorship. So we have fractal institutional sponsorship. Okay, price comes down into this portion. Your stops are going to be over here. So if I were to draw a color, use a color, it would be so over here. That's your stop. Here is your entry, and your take profit projections I'll tell you guys after this. Okay, this is your high probability return to order blocks. Do you understand? Does it only have to be the body? What if the order block body is short, but the stop hunt wick is long? Yeah, that's fine as well. That's fine as well. As long as the order block is forming below this one. Yes. So do you guys get it? High probability. So this is a high probability bullish order block, right? So high probability bullish order block. I'll show you one variation of it now. You guys figure the rest out. Okay. Yeah, with high, exactly, with high, it essentially when it reacts, it's a high resistance liquidity pool. Yeah. Okay, so you guys get it, right? So let's move on to the next part where I'll show you guys another example. Okay, now here's the thing. Okay, now when you're looking for order blocks, most of the people, and again today's Bitcoin was a perfect example. Okay, most people, they see this, right? You know, now let's say people know an order block is, they know how to use it. Okay, here's what they do. So you got this, you got the candle, you got the displacement here. All right, and then you have that. Okay, now you have that. Now this is the step one. Okay, as to certain mistakes that lead to your own trade getting induced. All right, so you have this order block, you have the green candle, up candle. Let's say you have a massive ass wick over here. This I'm just doing it randomly, so get the point. Price goes up and then immediately comes back down. Okay, immediately comes back down. Right now, see, as price is going up, obviously you will have certain scenarios where it does this, that. down, up, right? So those are for your own study. So for your homework basically, right? So this time the bootcamp is heavily centered on homework, right? So this over here, all right, when the order block has formed and price actually takes buy side liquidity, as for example, when it takes buy side liquidity and it's forming this low over here, right? Do not expect this price leg to go far. So do not expect this price leg to go far, right? Because literally there is nothing, okay, there is nothing that makes this here, right, makes this over here a good reaction. Okay, what do I mean by that? What I mean is, see, this order block was formed, okay, this order block was formed and we broke market structure. So we took out buy side liquidity, right? Took out buy side liquidity. Order block was formed. We took out buy side liquidity. After taking out buy side liquidity, we formed sell side liquidity. Now, why, you ask yourself, why will the algorithm, okay, why will the algorithm want to move price, all right, want to move price without taking any existing sell side liquidity in the range? Because we understand that price moves from liquidity to liquidity, right? Price moves from liquidity to liquidity. So on that basis, we can expect this to be traded through and then go up. Okay, be traded through and then go up from here. So this is your classic inducement into an order block, and this is another scenario where an order block is highly probable. So what does this say? This says that you have two high probability returns to order block scenarios, not just one. Your first one is you have the stop hunt, order block forms inside that area. Then you have stop hunt, order block forms there, goes up, engineered liquidity here, and then price comes into an order block. Okay, so if I were to write it down, your first one is I'd say, okay, liquidity taken to the left. Second one is liquidity right above below the order block. Okay, this is your high probability returns to an order block. You understand? What about the others? If the time of day is right, you'll get the strong displacement anyway. So yeah. All right, good. So that's the high probability. Okay. So now low probability would be this. Low probability, right? Order blocks, right? You have, now we understand that the order block needs to take liquidity. Okay. Now, what if you have this? You have low, okay, and then you have this one. All right, you have this one. Is this a high probability order block? No. Why? If you look to the left, did it take out liquidity? No, right? Liquidity not taken. Okay, liquidity is not taken. Therefore, this over here is low probability. While you will get a reaction, this reaction is to go into another high probability opposing PDRA. So this reaction is to get in to the nearest high probability PDRA. Okay, high probability PDRA, and then sell off. Okay, and then turn off. What if there was SMT? You learn that towards the end. Okay, just to get into the nearest high probability PD array, and then after it reaches that particular PD array, what it'll do is it'll just boom, 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 straight away go for these what? Relative equal lows. Okay, relative equal lows. All right, relative equal lows. Now note, now properly note this. Okay, I said while you will get a reaction, it will be to an opposing PD array that's closest. Okay, that's closest. Yeah, do you understand? Exactly, lower time frame server. Do you understand, everyone? So your homework is to get the opposite scenario, right, for the bearish order block. Okay, so that's the example of a low probability order block, and I'll just scan through some examples with you as well after this. Okay, so that's that. What about everyone else? Is everyone okay? Oh, everyone else? Okie dokie, okie dokie. All right, all right, all right. Okay, next part. What's the next part? I think I'm done. Okay, yeah. So boot camp finished. All right. So now let me tell you give you the homework. Yeah, and then let's go to some examples. Let me check out the homework first. iPad don't lie is at work. Okay. Homework, right? Homework. Look carefully. Homework. Find 25 examples. Okay. Find 25 examples. Each. All right. For high probability order blocks. Okay, high probability order blocks and low probability order blocks. All block scenarios. Okay, 25 backtested, 25 front tested. That makes it is this already old homework? No, old homework was the cycles, right? This is order blocks only. Okay, so that means you need, for high probability order blocks, you need a total of 50 examples. Low probability order blocks, you have a total of 50 examples. So you have 100. Right? It's a lot of work, but pattern recognition is key. Right? So 25 back tested so we have 25 back tested, 25 front tested, 50. 25 back tested, 25 front tested, 50. So total 100, right? That's all. So that's all. Now let's go look at some examples. Before I get into the examples, right? Let me first get back to the laptop screen. Hold up. Okay. Chat box also. All right. Okay. Who has done the homework so far? The old one, the other ones. Don't be shy. Who has done it? Who hasn't done it? What about the others? 38 people here, excluding me. Tell me. Still working on it. All right, as long as you get it done, yeah. Okay. Okay. All right, so let me show you some one or two examples. So Bitcoin, as you can see, is working out nicely. Let's move over here. I am not expecting this to continue higher at the moment. I want to see it come all the way back down here, then go up. Let's see. All right. If it goes up also, I'm not going to complain. I was just watching the price action. I wanted to see liquidity pools for it to take out to trigger my other buy limit that I had. Okay. For 15 minute, right? Okay, now look at this. Take these guys out since I have the orders anyway. Okay. No. This trade is based on my personal algorithm. I can't give you details on that, but I'll show you why based on the order block. Okay, now here. Over here, we have Ethereum, this one, right? Ethereum SMT. So we have not over here. We have over. So I remember right here. Here it is. Okay, so we have this one here. It's low. Yeah, that also. But I'm looking at this. That this one's complete, which you'll learn in a bit. You have this one here, and then this one here, this one here, that one here. So obviously they are SMT-ing. Okay, they are SMT-ing. So because they are SMT-ing, right? Let me take this out. When I saw that, right, then obviously, if one fellow is going to make a low, right, this fellow should make a low inside this range. So that's like logic, right? Then look, you have low, low, and what formed inside the low? Bullish order block here, right? Bullish order block over here, and this bullish order block was eventually used right here. That's where the entry was. Okay, that's where the entry was. Now my stupid ass tried to buy over here because I was still not at home when I was looking at the charts. I was still in the mall waiting to have lunch and come home. So I was on my iPad, so I didn't have a clear view on things. So because I was walking around, so my stupid ass thought that this was the move. I bought somewhere here, and then boom, it just came back down. I just closed it at break even. So I got back in over here. So Paperstone, as you know, always goes under maintenance. So good to know that it's going my way. So this was the actual move. Okay, we had the SMT first number one over here, as Denizan pointed out. That one caused a break in market structure. We were left with liquidity right over here. Now, if this low wasn't all the way down here, okay, if this low over here wasn't all the way down here, then this is the bullish order block that you would have used, okay, for it to wick into. That would have gone all the way up into this particular piece of price action. Okay, but that's not what happened. So what happened was this came, made relative equal lows, did something else, and then started dropping. Right, started dropping, came back into this bullish order block. So this is a high probability bullish order block scenario where you have the bullish order block forming under buy side liquidity, right? SMT confirmed. Now see, when you see SMT confirmed, right, and then you see a bullish order block forming, then that should give you insights into something, which I can't tell you on record, right? So here you go up. Then you have this one, this low, this one here. Yes, this is a high probability order block. Hence, why when it came back down, okay, hence why when it came back down here, it actually worked, right? But it worked only to take out this high, which is like a trade in and of itself, right? But for me, yeah, that's not enough on Bitcoin. So that's like a psychology thing for me, right? So for me, it's not enough on Bitcoin. So for me, if I was using my velocity model, then yes, this would be my target. But I wanted to see it go here. That is why I got hit at break even. Okay, so it is a good trade. As you can see, bullish order block forms under this, comes back down into it, and up it goes. So that's a good trade actually. Now see, this high, down, here, down, this here, right? This over here, bearish order block. Okay, bearish order block. Is this a high probability bearish order block? Someone tell me. No? Are you serious? Yes, very good, Hamza. Yeah. So bearish order block took our liquidity. We immediately started moving lower. We came back inside. So this is a 15-minute chart, right? So go back in time, 5-minute chart. Here you go. So here's a bearish order block. We broke market structure. Now see, now look here. Look at the x-axis, right? It's 10:35 in the morning. So time is not right. Okay, time is not right. So because time is not right, it doesn't go in your direction for that long. So then it goes up into the wick. Okay, into the wick. A wick in and of itself is also a hidden PD array. All right, is also a hidden PD array, which I will explain later on. Hidden PD array, which I don't think I should talk about on record. Okay, the hidden PD array, which price is then going to use to drop lower. So now when it's going to drop lower, someone tell me, is it going to drop? Is it going to stop at 0.1, or is it going to try stopping at 0.2? Which one? 0.2, right? Exactly, equal lows. Because now this is a nice generation of equal lows. Therefore, it's enough to take it out. No, it's on my N30 cycles. N30. N30. Okay, let's see what happens after that. Okay, now let's assume you took the trade. I tried taking this trade, but I didn't have data on my Wi-Fi, on my iPad, sorry. So here. I'll stop teasing once you come back to the light. You're still in the dark side. And yeah, take profit. Okay, so that's a high probability bearish order block on the 15-minute time frame. So again, you always want to be focusing on framing your trades on 15, 30, 1 hour, 4 hours, right? This is not loading. Come on, okay, 15 minutes. Right. For some reason, okay. Right. Okay, now see what happens. This is a fake move. This is a fake move into what? This here is the bearish order block that hit liquidity, broke down, okay, broke down, comes back up into the wicky part of it, and now starts to sell off. Okay, I want to see it go below this low. Yeah, ideally all the way down here, but if it can wick and if it can wick down, and if the body can stay above the 50% mark of it, then it's a valid trade for me. Yeah, it's a valid trade for me. Okay, anyways, that's the high probability bullish order block, high probability bearish order block, another high probability bearish order block. I want to press sell. I don't know why I didn't. Yeah, it is why it's okay. So high probability bearish order block. Okay, and again you can see up. This one over here. Let's see if there's one on the 1 minute, 3-minute chart. Okay, here. So this up close candle takes our liquidity. So this is your highest up close candle being your bearish order block. Okay, let's take a hypothetical trade and see what we could have done. I need to keep it in an imbalance. So imbalance would be here. All right. So here. All right. Let's see if we can get this here. Yeah, this one. Let's see if this happens. Okay. That's all. All right. So I'm going to stop recording, and then we can get into some of my N30 concepts. As if I just give you 1 or 2 things. Okay. Stop now.